Thank you so much, Rohit, Abhishek, and Aakrit for being here for this panel. Really appreciate that. So we are all, here keen to understand and know what makes us super angels. You guys are founders turned angels, and what is it that you do differently that the other angels can, kind of learn from you? And is there some kind of a founder's urge to angel invest? What is it that you do? How is it that you do? And what is your playbook like, your angel investing playbook like? So we would be hearing about all of that, for whether you have FOMO or not, looking at other founders. So we'll start with you, Rohit. You've been a successful entrepreneur with, I have a chain of hospitals with Cloud9 chain, and now you have a fund. So as an angel investor, you've, I think, invested in about 50 odd startups, right? And now with the fund, you're doing it in a formalized way. And is it because you don't know how to say no to startups?
Yeah. Hi. Thanks, Dipti. Hi, everyone. Good evening. Yeah, I think it's, as a founder, I don't know about these guys, the toughest thing I've had to learn over the last 1 year is to say, how do you say no? It's been really, really hard. Very difficult to kind of understand how, the perspective of a founder. You're always more leaning towards the founder side. I believe that, everybody says TAM, TAM, TAM. TAM is as big as the founder's imagination, honestly, right? But you still need to have several other degrees of conviction to kind of understand why do we invest in him or her? And I think it also stems from a great sense of, how are they going to execute this entire aspiration that they have. So for me, actually, as an angel, I started way back in 2015. For me, it was just generally to be part of this club that was coming up at that time to say that we angel invest, very honestly. My first investment was in this company called Off Business, which just became ET Startup Awards winner. Ashish was on my board. He said, I'm leaving. I'm starting this company. I said, okay, whatever you're doing, I'm part of it. In a haste, I had to set up a family fund, invest in it. So that's really how I got started. So FOMO into whatever level for getting into angel investing. But then from then on, set up networks, understood, spent a lot of time with good founders, helped me immensely also to bring back techniques and ideas that they were working on back into the business that I was building. So it was actually, for me, it was a lot of give and take that I could also learn from some of these guys. So it's been a fantastic experience. I went on to work with funds later on, became a scout for Sequoia, and I thought the next natural increment step was to kind of set up an actual fund where I could then go and invest in other entrepreneurs and do this over a period of time. So for me, that's been my journey. And yes, angel investing has really helped me to get to where I am.
Wonderful. We'll come back with more questions. Coming to you, Abhishek. So Abhishek, in his previous life, he used to be on the other side of the table. He was the one who discovered Flipkart, and we know how that went on, that story. And now he's taken his own startup. He had another startup before Tracxn, and now he's taken Tracxn to a spectacular IPO. And did you know that he has more than 100 startups that he has funded, and he does it all for a hobby, according to him. 100 startups, it's a hobby. Abhishek, why you do this, and what is it that you as a founder could not get that you're giving to the other founders?
Correct. I'm really glad to be here. Thanks for inviting me today. So I spent 3 years at a fund, Accel Partners, between 2008 to 10. Probably met like 500 to 1,000 companies during that period. And I wanted to be a founder, so I left. And the way my first deal happened was I invited a college junior for interview. And I got connected. I was looking to hire. And then he came and said, look, I came out of courtesy, but I'm starting something. And so he told me about what they're doing in logistics. And then I ended up backing. Then I told them, look, if you're looking. Then he reached out. He knew I had done Flipkart deal. So he said, why don't you put in some money? And that's how my first deal happened. That company was Delivery, which went public recently. That is, in some ways, a classic playbook of angel. You are not always looking, you're not, like VC would start with a thesis saying that this is the market I want to go after, I want to meet all the companies there. that is very top-down approach, and they usually do a much better job at finding great companies because they are they have to put a lot more work. Classic angel playbook is to back people around you. They can be your batchmates, they can be your ex-colleagues, like in Rohit's case, they can be ex-board members. You do put in some effort to understand what the market is, but broadly you are saying that this person I know, I want to help them chase their idea, right? And obviously, I do use some of my intuition to say that this can be a reasonable market. But I won't spend more than, let's say, 20 minutes if I'm meeting a company. And I usually meet like maybe 2 companies a week, not more than that. And that's why I call it a hobby. So probably like maximum of 2 hours a week, I never cross that. Usually it's 1 hour a week. Never meet more than 2 companies a week. Usually 20 minutes if you're not able to decide. And these are people around you who you're backing. So that's how I got started, and that's usually has been the playbook. Over time, obviously, as you do more deals, some funds invite you along to invest along because you know something which others don't. So funds would say, look, we are doing this deal, we are putting 2 million, why don't you put 10 lakhs along with us? And there you get invited because you have been running a company. And sometimes you can share some of your learnings with these founders, and that gets part of the deal. But I've invested over 100 companies over the last 15 years, so it's a long gestation.
100 is a good number. Aakrit, as an entrepreneur, you've seen the entire journey, right? Starting out with Haptik and AI, in that space when it's been nascent, and then you got acquired, and now you are also an angel investor. About 80 odd startups you have invested in. Some of the well-known ones are, we were talking about Unacademy, Dukaan. And so tell us about your founder's urge and what is it that sometimes you felt, you had a mentor to share your learnings with you, and what is it that you share with your founders?
Yeah, I think just echoing the sentiment of my co-panelists, 99% of founder or operator angels get started accidentally. I don't think most of us, when we are thinking about career paths when we are in college or 19 or 20, are thinking one day I'll be an angel investor. I don't think that's ever a thought. I think you start learning about it when you become a founder because you go through that cycle of trying to raise capital. And I think then what happens is, like what both Abhishek and Rohit were saying, is that some founder will call you, it's either a batchmate, board member, in my case actually a complete cold call, and will say, hey, listen, I've been following your work, it's very interesting, I'm trying to build this which I think you can add a lot of value, do you want to talk? And I said, okay, if nothing else, I'll get to learn a little bit. No idea what angel investing means. So I went, spoke to this guy, and I said, you're thinking about this perhaps in this way, why don't you think about it in this way? That conversation led to him saying, listen, I'm trying to raise a round, do you want to invest? I said, what does that mean? You want my money? When you have, very little money, you're obviously very conscious of all these things. He said, yeah, don't worry, 1, 2 lakhs, 3 lakhs, 4 lakhs, jo aapko theek lage. That's how I got started. Then he told some of his peer founders about me. 14 companies have been born out of Haptik. So it's just one thing led to the other, and I guess the first 25, 30 investments were just like this. It was never an angel investment, super angel, any of that. Then, of course, I think once that happens, right, I've also noticed this about a lot of operator and founder angels, then you start thinking about it like a product. Then you start thinking about, okay, listen, now that I'm doing it, and even if I'm doing it 2 hours, 1 hour, 5 hours, how do I do it well? I think that's that founder mindset which then kicks in to say, now I should think about not just doing it for the sake of doing it, I should do it properly, whatever time I can allocate. So then, yeah, just one thing led to the other, and you ended up with, like you said, all these investments and so much capital deployed. And to answer your question of, I think in similar, I'm guessing, is Abhishek's case as well. Well, Rohit now runs a fund, so it's different. But I think 99% of angels are only spending time reactively. which is that if you want an angel investor's time, don't go to an angel investor. I think, or rather if you want them to spend proactive time with you, if you are hoping there'll be a weekly call where they'll guide you through their company building, that's not going to happen. We have way too much going on. But if you ping us at 1 a.m. saying, I really need your help, do you have 10 minutes? Most of us will get on the phone. So I think that's the value that an angel brings. And also, it's a very nuanced thing, you know. I'm going to be politically correct.
It's okay, you can.
No, but still, Bangalore, I don't trust.
Frank.
Most good angels, they're, like Abhishek said, they're truly backing a person to do well. Yes, money is important, but it's not what they're in for. So what that means is that when a founder is looking for truly unbiased feedback about what they should do about their company, that's when the good angels step up. No matter how good your board is or your VCs are, the best VCs also, they're obviously there for a reason, which is to make money, return capital. That's not what most of us are there for, or at least should be there for logically, right? Like it's important to generate, but when that unbiased feedback comes where you want somebody to tell you that just shut the company, right? That's, I think, what an angel can do.
But what happens when, you know, you are funding a startup and like, it's always like this, right? When you're teaching somebody, you've been on that path, right? You've already crossed that bridge. And when you're seeing the other person struggle, what is that, you know, that urge to, okay, let me do it for him. Does that happen? How does that work for you, Rohit? What sort of advice do you give? And how do you go deep into this whole process of, as Aakrit said, mentoring and advising?
Yeah, look, I think just taking a, spring from what Aakrit just mentioned, I think it's always about investing in people. We are humans believing in humans. So I think it's always about saying what can he or she do and how do you kind of empower them. It's not to go and solve that particular situation. It's also about sometimes helping them knock on the right doors. It's sometimes making the right sort of connects, helping them speak to somebody. It's usually that. I don't think, like I said, as an angel, we definitely don't have the time to kind of go do that work for them. Even now as a fund where we work a little bit more closely with them, I think you do have the urge to kind of see that, okay, they're going to try and do something which they will kind of have to unbundle later on. But I think it's well said and left there rather than saying that I'll go and do it. Because you can't scale anything that way, right? And for good or for bad, most founders also respect that you're a good sounding board, you're able to kind of give them advice when they need to. But I think the urge is rather it has to be controlled from our side rather than their side, right? So I think most of them will do well by looking at it with a close enough, but actually with a telescope sort of view, right? And it always helps because you are able to bring that macro perspective. Many times founders are too close to the problem and they're not able to think right. And it happens, for good or for bad, it happens. And I think the best thing that you can also offer is not to get wedded to that entire situation and say that, how do you overcome some of those things, right? So it's worked that way. Even in a good situation, when there is multiple offers, which one to take, or if there is an acquisition of some sorts, where do you lean towards, right? So it's in both good and bad cases that you kind of say that, how do you still not kind of have the answer for them, but be there to support them? I think that's what is the key.
Abhishek, what is your process? I mean, even though you say it's a hobby, but what is your process of that mentoring, of holding that hand of the founder?
So in most cases, when they're doing something, they will reach out and you share your experience in that. So for example, if a company is hiring CFO for the first time, you tell how we did it. Beyond that, you really can't spend too much energy there because that is endless. And if you end up spending too much time, you will stop investing completely. Because our jobs are really hectic. It's not as if we are sitting idle. It is as hectic as it gets. So usually it is either restricted to sharing how you did it when your time was there, or as Rohit said, usually it's a lot about I talk to offers from different funds, which is the right fit for me, or is there a difficult situation I'm in, is there a quick advice on that? Most of these calls would last between 5 to 10 minutes, not more than that. And these are also very sporadic in nature. So they usually come either to get learned from our experiences or take our intuition on a situation and see how would you respond to that.
Aakrit, what about, when to wear the founder hat and when to wear the investor hat? And would you invest in a company which is in the same domain?
I think two different questions. I think as an angel, you're always wearing the founder hat. I think that's why you're, I think, called an angel and not maybe a VC. There are pros, cons to everything. So I think as an operator, when you're investing, you're always, I think Abhishek said it really well, it's experience share, as simple as that, right? That, look, this is how we did it, this is what worked, what did not work, what to watch out for, introductions, opening doors, and so on. In the same domain, now if you queue off of that, and if you were to invest in a company that does something very similar to you, forget about yourself, you're doing disservice to the founder. Because then there is going to be a point where you may not want to share something which then doesn't benefit them. So I'm very clear about two things actually. One, don't invest in anything that's close to what I do at Haptik. And second, actually avoid investing in even portfolio competitors. Because same, right? I mean, that same logic holds true. Unless, of course, look, many years later, the companies pivot and then they end up doing the same thing that you can't control. But at least on the face of it, avoid doing companies that are doing things similar, which again is very different from VCs, right? VCs pick a theme, pick a bet, and they'd likely do multiple. Because then again, you can't be fair to the founding teams.
Rohit, so you as when you were angel investing and now you have a fund, what learnings have you taken from your journey as an angel investor and now in the to manage this fund? And what is your playbook look like, an angel investment playbook? And a lot of questions together, but they're all interconnected. And like the learnings for essentially for our angels here.
Yeah, look, I think for angels, again, I don't think you'll go a lot deeper. We were just discussing outside that, earlier it was TAM, now it is SAM, now it is SOM. I don't know if you guys know, there are so many of these definitions which keep coming about. But look, the founder finally has to deliver. So as an angel, I think it is still at a very 5,000 feet level. Do I like this person? Can they get the job done? You're just looking at 2 or 3 ticks in the box and moving on. As a fund now, and this has been my learning over the last few months and about a year now, there is so much more. You have to do outcome analysis. You are fussed about the rights. You'll think about capital attractiveness. You'll think about the sector depth. You'll think about the founding team's cohesiveness to actually be able to pull off the execution. There is so much more. Like 20 minutes is possibly, 20 minutes is a hello call, right? We're now spending so much time understanding. And for me, I think as a founder, the one thing that I want to be able to do is, even if you don't end up investing in a particular opportunity, I think the idea is to kind of give them good advice which they can kind of use to build what they are building towards. And that again, unless we put in the time, we will not be able to do it. Some of us can actually tell them, looking at it in 15 minutes, what are the things that they need to watch out for, but I think we'll need a lot more time to go a bit deeper, help them understand what are the challenges that they'll probably need to overcome, right? So we spend time to kind of look at some of those things. My learning from Angel and VC are like, it's just not the same at all. I was a very, very happy angel. Now, VC is very new to me, so time will tell, but it's that much more harder.
But a happy angel, that's a good one. Abhishek, you meet so many startups. Even now, you said from your Axel days, people who you met come to you. Which sectors, according to you, are good sectors now? What are you seeing out there in terms of the quality of founders?
So first is I resonate strongly with Happy Angel. So Angel is a lot of fun. VC is a lot of work. It's probably 100x more work to do one deal. With respect to sectors, I think it's usually more bottoms-up signal. Wherever good companies are getting created, you see that. But broadly talking about top sectors where I see a lot of good companies will get created in the future, I think I was not a great believer in consumer brands, but now I think India will produce a lot of good high quality brands which eventually will go global. So these are not companies which are importing from China, putting a label and selling. No, these are doing fundamental product innovation, design in-house. Eventually have a potential that in 20 years they can dominate 20 countries. Like Lenskart has shown the way. Mama will eventually become leader in 20 countries. We can see some of that. So I think D2C is, I think, very promising now. I think China plus one is a big trend. I think a lot of B2B commerce, global cross-border can be very interesting. Deep tech is suddenly, space is hot. Nobody expected Indians will launch rocket, but like Pixel showed the way there. SaaS continues to remain a hot theme. Obviously, the valuation multiples have gone down significantly, but I think today Bangalore has most number of programmers globally, higher than Bay Area. And the quality is only increasing every year, both in terms of product design, tech capabilities. So we'll see a lot of more software coming out of India. So it's very wide. I think India is producing, in some ways, underlying current is firing on all cylinders. So we are seeing exceptionally high quality of founders. It is as good as it gets.
What about you, Aakrit? Which sectors do you think are hot right now, and what is your investor playbook look like? Angel investor playbook.
I think Abhishek summed it up honestly really, really well. I'm trying to think, what do I disagree with him, and then what can I add?
You can add happy angels.
No, but why not, right? So I'm still yet to see the consumer brands thing play out. So I would love to separately chat with Abhishek to learn what he's seeing, because even though some of them are becoming global, how large they can become, we don't know yet. So that part I'm a skeptic on. So I've done maybe 2 consumer brands out of the 80 odd, so very little of that. And then maybe the place where personally I am the most aggressive, that's also comes from my background of having run a SaaS company, and also back to the one other earlier point we missed was see, the best founders also go to the angels who they know can help them in their areas. So I tend to also get most SaaS investment opportunities with great founders. So that also becomes a two-way bias. So, software as a service and SaaS in general, of course, now with AI added to it, is where I'm extremely long on. Exactly to Abhishek's point, I think there are many pieces coming together truly to say that India can be the next Israel when it comes to software for the world. Israel has a beautiful playbook that they've done. I've actually angel invested in 4 Israeli companies to only learn how they do this and how they take the products global. I think India is just, we have few more pieces to figure out, but there's going to be a ton of software for the world written from all over India, not just Bangalore.
Another interesting topic that is always people are talking about in the startup ecosystem: Bombay, Delhi, Bangalore, which one? And unfortunately, we had Sairi. She couldn't come. She was from Delhi. Aakrit is from Mumbai, and we have 2 Bangalore, angels here, founders here. So, which city is best for a founder? Which one is good for nurturing them? Of course, we have traffic.
Yeah, we have all forms of traffic. No, I think look beyond just Bangalore, Mumbai. Let's look at exactly what Aakrit just mentioned in terms of how the country has to grow, right? We need more Mumbai, we need more Ahmedabad, we need more Chennai, we need more Bangalore. I don't think it's about one over the other. Bangalore has a head start, which is great, right? Mumbai, for example, for capital markets have always had like a huge head start. For me, I don't see it as this versus that. I think it needs everybody to come up and rise, because the whole vision of the 5 trillion economy, it's not just going to happen by just saying, right? It has to happen as a collective union. So I actually believe it doesn't matter where some of these things happen from, but yeah, I'm from Bangalore, so my vote is Bangalore. Sorry, Aakrit.
So Abhishek, according to Tracxn, Bangalore is the top city.
Yes.
And also this panel is also representative.
Yeah, sure, why not? I'm just waiting for my turn.
So I think Bay Area started first, then Bangalore happened, then other cities happened. It's a matter of time that every city will scale it. So I don't think it's restricted to one place. But I do think if you are in fintech or financial services, Bombay is the place to be. If you are in consumer brands, Delhi has some certain advantage because import industry is all there. Other than that, I think it's a matter of time. If you plot Delhi like 5 years or 10 years forward, the trajectory will look very similar. I don't think there is a reason to believe that we have something special which other cities can't replicate. In fact, for that matter, Delhi has been more entrepreneurial all through years. Gujarat is more entrepreneurial than most of India. These cities will pick it up. It's a matter of time. There's no reason to believe that Chennai SaaS ecosystem can be second to none. So I think we were lucky that this wave came to Bangalore 10 years before everywhere else, but it's a matter of time. But I think it's more important that you surround yourself with people who can share their playbook with you. So if you are sitting in Baroda and if you don't know people who have built very large companies, you should travel to other cities and speak to people who have done it before. I tell people that, look, if you're going to Japan for the first time, talk to somebody who's gone to Japan before. Don't solve it using first principles. It will be helpful, but experience also has a lot of value, so you should do that.
You get inquiries from founders in the smaller towns, Gujarat, for instance.
Actually, my inbound is very small. So I usually get people from very conventional areas. Like, actually, it's mostly from HSR, not even Bangalore.
Rohit, that you do get.
Yeah, we do get. Yeah, it's quite spread.
It's your turn.
Yeah, good. I've been listening. First I'll plug something. Some of you must be aware, but a bunch of us about a year back started this organization called Tech Entrepreneurs Association of Mumbai, otherwise known as TEAM, with the whole idea to promote the Mumbai startup ecosystem, because we realized to their points that most young founders were preferring other cities to start companies than Mumbai. And there was a bunch of us who built companies for the last decade that thought we should change it. So why I'm mentioning that is when you ask that question, it's a topic very close to my heart, because we think about this a lot in Mumbai. I think both of them alluded a little bit to this, but if you look at what happened in the US or in China for that matter, right? Obviously there's one area, one city, one place that starts becoming the hotbed of anything new. And in technology, it was San Francisco. In the US and in India, it became Bangalore for a host of reasons. In the US, it happened because of a combination of Stanford and good weather. In Bangalore, honestly, it happened because the first wave of IT services was here. And then that led to formation of companies. But if you look at eventually what happens, whenever any ecosystem becomes meaningfully large in terms of value, impact, and then finally wealth, everybody starts, wanting a piece of it. And then eventually verticalization happens and you'll find certain companies or certain types in certain areas. Today, like I said, fintech, you want to be in Mumbai. In fact, I'm seeing so many fintech companies which are, you would think are in Bangalore, but actually the founders have moved base because they have to be close to the banks and RBI. Chennai's become SaaS because, Zoho, of course, is a landmark company created, and there's so many founders coming out of there. D2C Delhi. So I think there's going to be a place for everybody to some degree. And I think every city is going to have its own mind share. What I do feel strongly about is that no one city should have the center of gravity only. I think that's what we should learn from maybe other places, is that today New York is as vibrant when it comes to tech as, let's say, San Francisco, and same with, let's say, China and other places. So I think everybody will have its share. We'll eventually see verticalization, and we'll eventually see pockets of companies being created everywhere. Though I do think that one unique angle to India is that, unlike maybe other countries, is the cultural nuance between the cities is very different. There was somebody, okay, I'll not be politically correct right now. I'll just say what I have to. But, somebody was saying it the other day that, Delhi गोल है, तो वहाँ पे लोग तुम्हें गोल घुमाते हैं, ठीक है? बैंगलोर में थोड़ी हवा ऊपर ऊपर है, तो यहाँ पे लोग थोड़ा ऊपर ऊपर रहते हैं, ठीक है, और मुंबई सीधा है ना, तो नॉर्थ साउथ, तो so cultural nuance thoda we'll have to figure.
But Bangalore rocks.
बैंगलोर में हमेशा ट्रैफिक रहता है.
The traffic is everywhere, honestly. I'm not sure when the last time you were in Delhi where it's supposed to be infra is sorted, but it's everywhere.
So we'll just open up now for questions. Can we have the mic?
Yes. Hi, so firstly to Aakrit, I'm actually the part of 1% who wants to become an angel down the line, has it all sorted. But my question is, what do you do when you see the startups you've invested in violating the gold standard of whatever it is, whether it's governance or policy or logistics, anything?
Who's this?
What do you do when the companies you've invested in violate gold standards?
They violate standards like policy, governance, and so on. I think, look, usually the way it plays out is in most companies, see, we get in fairly early, right? Also, we are the smallest check typically, even in the early round. So the way an angel round typically gets constructed is a company is raising anywhere between 4 to 8 crores. There'll be one PeerCapital type, say a VC fund or somebody else who will say, look, I'll do 3 to 5 crores. And then the others are angels. So what ends up happening is that the responsibility of, not responsibility is the wrong word, but let's say the idea, the lead on that round is typically a micro VC or a smallish fund who's then looking at what the company is doing. So as a result, you have very little influence or control on governance and policy. And you can do very little, except, of course, to our earlier point, hope that you've picked the right founder, and when you're having conversations with him, for the lack of better words, educating in the right direction, right? That this is what you should be doing, and this is how to do, and this is what not to do. But beyond that, a founder, if they don't listen, right, and if the board has not been constructed correctly, there's very little as an individual angel you can do. I invested in this company called Mojo Care, which everybody's seen in the news, right? I've known Rajat, who was one of the co-founders, for 10 years. Great guy. You wouldn't ever think that there's something could go wrong from a governance standpoint. It blew up, something happened. I actually still myself don't know fully what happened, because there were so many investors. Sequoia had invested, many others came along, and we were like a small sliver in the cap table. So all you could do is maybe ask the funds that, look, have we covered all our grounds? And you're not, at least as angels, you're never directors, never compliant, right? So.
Just want to add to that one thing angels have to remember is you won't have access to all the information, right? It's literally a leap of faith, exactly the word angel, you're just believing and that's it. So when things go wrong, you're probably the last person to know unless you're spending time with the founder. And in which case, if you're the last person to know, I don't think you have any degree of influence to like overcome any of it. So
and guess what, by the way, even in that Mojo Care case, when all of this happened, guess what I did? I messaged the founder, hi buddy, are you okay?
Yeah.
Hang in there. If you need to talk, let me know.
Yeah.
So it wasn't as if also कि बता मुझे क्या हुआ.
Yeah,
like it was more a case कि are you okay? घर पे all okay? Mentally, all of that. I feel like that's the job eventually.
Hi,
Any more questions?
Srini here. I'm an angel investor. For last 10 years, I've been investing in startups. I lived out of India for 20 years. Recently moved back to Bangalore. Thanks to Shanti, LetsVenture, I think people who are living outside, like us, who can invest in our Indian ecosystem. And the content is going on very well. Today, LetsIgnite. My question to Abhishek and Rohit and Aakrit, you guys have invested a lot of companies, right? Startups, 80, 100. What is the strike rate in your own portfolio? And the portfolio approach, what you guys talked, is absolutely fantastic. But a new angel investor with a little money, probably he will not be able to invest 80, 100, right? Personally, I have invested in 15 companies. And the first company I got an exit last year, and I could cover the entire investment, what I could. And I continue to do it. But probably, I think not everybody can invest such kind of numbers. So the first question is, what is the strike rate? And what do you advise for new angel investors? What would be the optimal number so that they can stay in this space and continue to reap the benefit, ROI? Thank you.
So it's somewhere between 1 in 10 or 15 for me. Fortunately for me, my first deal returned all the money that I've invested in last 15 years. So I never had to do the math, but at least 10 to 20 companies. Another advice I tell people is that play slow. It's like poker. You don't have to keep raising.
When you say 1 in 10, what does that mean in terms of strike? Is that like a unicorn? Is that like a Series B? A,
so
exit?
if I invested in 10 companies, 8 complete, like there's no money back. Not you basically got 500 rupee for 5 lakh you invested. In one case, I got like 20x, and in other case, like it returned everything else. So one company returned meaningful money. Rest was almost a washout. So usually that has been the range. In most cases, it will be like 1 in 20 for where one deal will return all the money that you've invested in 20 companies and probably more. So you have to pay slow. So whatever is the smallest check that founder is ready to take, you put that money. That is usually what I advise people when they're starting up, because your deal quality will improve in third, fourth year, not in the first 2 years. You will usually get, because nobody knows you, you will see the deal much later than everybody else. So that's what I advise people. And usually, other thing I tell people is keep back really large companies. One of the things I think, the reason I'm able to decide something in 10 minutes is because I always think, if everything goes really well for this company, can this company hit like 50 billion market cap in 30 years? That is usually very easy to think. Everything else is much harder to think. I assume exceptional wild run, all stars align, it goes global, it becomes market leader. Do I see a $2 billion, $3 billion revenue in the company? Or a $5 billion GMV? That answer is usually a lot easier than finding if it can become a 500 million outcome.
We have one more question. You wanted to ask a question here?
Hi, Pallavi here. Abhishek, you actually just answered a part of my question. So I was about to ask you that, you mentioned within 20 minutes, 20 minutes is the time you allocate. So what's your framework for evaluation in such a short time? And my second question is to everyone on the panel, since you have invested in startups, up to 100 startups. So how do you keep a track of these investments? Is there a process or a methodology that you follow there? And Aakrit, Mumbai for the win. I'm from Mumbai.
So second part is easy. I don't track any of them. Most of the times in ET Startup Award, I met 3 founders who are in my portfolio and I have never met them. So a lot of cases you don't track, you just had a quick call. So my framework is simple. Very few ideas can cross, let's say, anywhere between 2 billion if you're a software company and 5 billion if you're a GMV company. Can this idea cross that? If that answer is usually quite simple. You don't have to do a lot of math, intuitively you know that. And then I look at the founder, they connect quickly, if they're reasonable. Like most of the times they come through references, so it's quite sorted. So in many cases, I have made up my mind before I get on the call that this looks like a great idea, and then the call is more to do validation. And that's pretty much it. Very few ideas can do that big an amount.
And do you have special preference if it comes from HSR?
Just want to add to that. Look, I think as angels, again, we discussed in the first question as well, some of it is also to do with what's the kind of information you receive. There are some very good founders who diligently send you quarter-on-quarter reports as a small update. If there's a round happening, obviously you have to sign off on a few things. So that's when you possibly get to know. I don't know if anyone's been able to diligently track what's been happening with all their companies. Now that I've graduated to a fund, there are tools that you can use where you kind of plug in the MISs, understand from a run rate perspective, burn rate perspective, everything that you can possibly kind of, monitor. But that you can only do when you kind of have the discipline of looking at it as a fund. I don't think as an angel, like I said, you will even have the capacity to kind of even track some of those things. But you can start, when you start, there are plenty of SaaS tools available to actually be able to put some of these information in. only thing is getting that information is a little hard unless the founders are willing to kind of put that out there.
Just to add to that, if you're on our platform, you get that dashboard. And if you want to know the details, our LetsVenture booth is outside.
Planted question.
Was it a planted question?
My CA tracks all this. And he reminds me of it twice a year in March and September during tax filing.
Yeah, Shanti, you have a question.
No, not a question, but just an observation. I loved this panel. It was almost like a dream set of investors who founders should find, and a lot of love coming from all of them for the founders they invest in. So I think
you are one of them. You're a founder,
yes,
turned angel.
Yes. No, but just from the love you can see for founders who invest into founders. Just an observation.
Thank you so much.
Thank you. Flight to catch.
Thanks a lot.
Is there a time for one more question? No? One last?
Okay.
Okay, yes.
Want an encore?
One last.
Thank you so much. As Sunita said, it was a really great panel discussion. So I'm from Tamil Nadu Startup Mission. Can you share some highlight like how government can take a play role in this to create ecosystem, and what role as a government entity should play so that we can thrive and create an ecosystem which is helpful for both angels as well as founders?
Actually, I am very keen on figuring out how government can do it. There are two, three very basic things that a government can do. I come from Jodhpur. Jodhpur is a hub of wood processing. There is no wood around that area. All the wood is imported, all the furniture is exported. Which basically means that if you seed a competency in a geography, it becomes a hub. And government can play a very beautiful role. So you create hubs, you decide which categories will go to which districts, and you create some seeding there. Seeding can be done through grants, like Karnataka has Kitwen. They did a lot of, medical devices and healthcare related things. You can do basic grants, like 30 lakh, 40 lakh, 50 lakh grants go a long way. They can do incubators, where you start batches on certain categories, and over time, you will see after 3-4 batches, good companies come out. Even if nothing comes out, you will build a competency, and eventually its city can become a hub. So government can play a very active role in seeding some of these categories, because not everything can be built out of Bangalore or Bombay or Delhi. There are hundreds of categories. You can seed it very easily with very small amount of money.
Get rid of angel tax and the whole idea of it and the name itself. There should be no concept called angel tax. The number of people who have reached out to me and we talk about this, that there's some committee being formed to talk about all this, and they said, okay, listen, what is your input on angel tax? And I just said, there should be nothing called angel tax in the first place. It just doesn't make any sense.
I'm just going to quickly add to that. I think, it should be more outcome-led thinking rather than just inputs, because everybody's tried inputs. I was actually going to say not angel tax, but I would love to see someone coming and saying there's a tax break for everyone who kinds of grows to a level like this. I'm going to give you a tax break, right? So they did it in healthcare. They asked hospitals to come and set up, and they said 10 years, no tax, right? Anyway, hospital takes a long time to gestate. It's fine. But in things like this, where that, it can actually have, like, we were speaking about portfolio, let's say 2 out of 10 kick it out of the park, right? You should not screw them. You should actually incentivize them to say that, okay, listen, no tax, right? So keep winning. Like, what has Dubai done, right? They said 0 tax, and that just, nobody understood what is 0 tax, but it just worked, right? So I think in our country, if we have to kind of do an outcome-led thinking with all of these things in mind, I think that would be a game changer in my view.
All right. Close.
Awesome. Thank you.
Let's close.